Hello everybody, this is Daddy here. Hope you're well. This is a scalping strategy and it's called the envelope trading strategy. So this is using moving average envelope. I did a MT4 version. This is the MT5 version. They're basically the same but using two different platforms. Let me show you first of all these parameters for this envelope. The period is 500 and the deviation is 0.08. So I'm using 500. We agree it's a huge number in terms of period, because I want everything, all the price action, to reflect in this moving average envelope. So the envelope is not going to be reactive to a sudden change in price because it's a huge period that is looking at. That's one. How do we trade this? If you want to go into market, you want to look at the time the price touches the blue one, which is the upper band. That is when we're going to go short. And when the price touches the red line, we're going to go long. So we are counter trend trading. So when it touches here, we buy. When it touches the blue line, we sell. Okay. This is the beginning of the day, for example. This is the beginning of today. You can see beginning of today, the price touches this line here, the red line. We could have bought here. And if you buy, where do you exit? You exit at the opposite end of the band. The opposite band, that's where you exit. So we're looking at here about 20 pips, 18, 19, 20 pips. Okay. So you buy here, you exit. Now you look at if you follow what I've said, that means when the price touches here, you should have also sold here. Is that not correct? You have sold here. But if you have sold here, you discover that it's not going to be a good trade because the price keep on going up. You could have been running at a 21%, at 21 pip loss. But how do we avoid taking such a bad trade? Okay, there's a way, and that is why we have the second chart. So this second chart is going to help you to filter out bad trade. So we are talking about today right now, and on this chart, this is a 1 hour chart of the same currency pair. I'm using Australian New Zealand dollar as an example. Actually, I've optimized for this particular pair. You can optimize for each and every pair, or you can even use these settings for other pairs. Let me know how it goes for you. If you have used this strategy for any other pair, whether they work, and yeah, you can put your observation in the comment section as well. So if you look at here now, you see we are in an uptrend. The blue line signifies uptrend. It means throughout today you'll be looking to take a bullish position. Buy. Let me just put this period separator here as well. If I put period separator just to know when. So this is a period separator. All right. So this is the beginning of today and this is the end of today. So from the whole of today, for example, since the beginning of since market open up to now, you will never talk about selling this particular pair. You only be talking about buying in a 1 minute time frame. So if that is the case, you're only looking when the price touches this buying zone. So it has only touched this zone once today, and at this point. So you buy here, you've already exited your position. So you are waiting now for another opportunity before the end of the day. Let's say price now touches, there's a news or there's a reversal and price come down to touch this, our buy zone, this, our red or lower band. You buy again. But don't just buy or go long. You need to verify that we are seeing an uptrend, because this trend also can change. If there's a big reversal down, it can turn from blue to red. In that case, you will no longer be looking for buy. You'll be looking to sell. So you have to be very conversant with the two of them. Make sure that it's an uptrend, you buy. It's a downtrend, you sell. So basically, that is how you trade. Also, I said if you put on a trade, you exit at the other end. That's your exit for a buy. The same thing, exit for a sell, is when you, assuming you sell, you have a signal to sell, you exit at the opposite end. But now you can set a stop loss of 50 pips. So you set a stop loss of 50 pips. It's a fixed stop loss. Each trade you take, 50 pips is your stop loss, and take profit also is 50 pips. So that's a fixed TP and stop loss. However, that your stop loss will not be touched most of the time, and your take profit target of 50 will also not be touched, because you want to be taking your profit on this band. When you touch the band up, you take your buy position, take profit. If you sell and you touch it down, you take your profit for the sell position. But occasionally, if it goes against you, your stop loss is there to protect. And some occasionally as well, when there's gap in your favor in the market and it hasn't touched your band yet because your band expands rapidly, then your 50 pip take profit will be a very nice place to come out of the trade. So that is essentially how you can combine these two to work. So on MT5, the envelope is there. So envelope, this is it. This is the envelope indicator, is free on MT5. However, the all moving average is not there by default. The one that I've downloaded, let me just quickly show you in case you want to find it yourself. If you go on an indicator, you see the one I've downloaded is this. This is the one I've just downloaded. If you want it, let me know. I will email it to you if you put your email in the comment section, or you can just look at the link in the comment section, link in the description, and you will find a link to download this indicator. Okay. And finally, if you want to open an account with a reputable broker, the one that I use, they're very good. I've left a link in the description of the video. You can click that link, open a demo or live account. They are regulated and your money is safe with them. So thank you for watching. I'll talk to you again soon. It's Derek.